Let's get more from our guest, Khiem Do, head of multi-asset strategy, Bearing Asset Management here in Hong Kong. And Khiem, we were talking about this to you. It seems that it's not about the plan itself, but how fast it's implemented. What about the market reaction so far? Do you think there has been much?
I think that the market disappointment is a little bit concerning, actually, because I would have thought that the headline number actually is looking better. But once again, we come back to how it's going to fund it, and how soon is that going to get implemented? Because I think that we need some action right now. As far as the U.S. economy is concerned.
Yes, stall speed. Right now we have 9.1% unemployed, zero jobs being added to the U.S. economy last month. I guess for some, people are wondering how is he going to get Republicans on board on this bill?
Yes, I think that there will be a lot of, obviously, negotiation and maybe some compromise to be done. But I think that the key is how quickly it gets implemented. Because if it gets implemented quickly and then it flows through the economic data, then I think that we'll get a better...
When you say quickly, what kind of timeline are we looking at?
I mean, I think that most expect this to be implemented more in 2012 rather than now. But if some of these measures can be implemented over the next few months, let's say by November or December, I think that would be a big surprise to the market.
Okay, so taking a look at the markets right now, we have these losses, by the way, accelerating in South Korea at least. But net, when you hear the headline number of $447 billion in stimulus, that's got to be good for equity markets.
Yes, it should be. It should be. It should be. But I think that, once again, unlike China, once China made the decision to do something, it gets implemented immediately.
Right.
But in the case of the U.S., because it's a democratic nation, so it has to be, passed by Congress and all that. But, the more negotiation, the more talking they do, then the worse the economy is.
Yeah.
So they got to talk fast and act quickly. Because if they talk long and act slowly, that is not good.
All right. So basically, we're not seeing much reaction to Obama's speech on the markets. What about what we're going to get from China later on today? How much impact? Do you think that's a bigger story for markets?
Yeah, for our Asian markets, definitely. I think that what we would like to see is a slight surprise on the inflation number. So if
downwards, right?
Yeah, downwards. Yes, please. But because if inflation comes out to be closer to 6 rather than 6.5, then I think that that leaves room for the PBOC at least to think of cutting the reserve requirement ratio, because that is really hurting a lot of the small enterprises in China.
Yeah, well, when you have slowing growth in the U.S. and Europe, you're looking elsewhere to help pick up the slack, and China seems to be what investors are looking for to be the answer right now.
Absolutely, yes, because Brazil has cut rates, Turkey has cut rates, and yesterday Indonesia also has widened the interest rate band a little bit. So that is also a sign of a slight cut. So we need China to do something as well.
All right.